Yes, I'm the crazy TQQQ guy. And wow, the number of questions lately has been rising fast. Bro, isn't TQQQ just better? Isn't QLD too slow? I want returns now. I hear this kind of thing all the time, but I still keep saying the same thing. For more general, everyday investors, QLD is the better choice. All right, let's think about a sideways market for a second. From around mid-October 2025 to mid-January 2026, the Nasdaq has basically been chopping sideways. Look at SOXL. Sure, semiconductors have had huge moves. But overall, the market hasn't been making a clean, big move up or down. It's just been wobbling around in a range. Now, if you held 1x Nasdaq, say QQQM, there's no major problem. But this kind of market is structurally very unfavorable for TQQQ, because volatility drag kicks in. Sorry for repeating myself, but we have new people coming in, so this matters. If Nasdaq goes up 5% one day and down 5% the next day, QQQM is almost back to where it started. But TQQQ goes up 15% and then down 15%, so it keeps getting shaved down. That's why we call it melting. In a strong uptrend, leverage is a blessing. In a sideways market, it's poison. Now, let me be clear. I'm not saying TQQQ is always bad. There are people this product fits very well. For example, people with strong cash flow, business owners, freelancers, high-income earners, people with consistent monthly incoming cash. For them, when TQQQ melts, it can actually be a good thing. They can keep buying. Nice, another add-on opportunity. That's how they treat it. Some people may not like hearing this, but leverage products are basically a game of using money to make money. No one has infinite money. But if you have a meaningful amount of capital and you do staged, split-up DCA buying, your odds can be quite good. I'm talking specifically about NASDAQ and S&P 500 exposure, by the way. Not leveraged single stocks, everyone. But now imagine this. You're a regular employee. You work full-time and take home maybe $5,800 after tax. Or your investment capital is limited. Maybe you're a college student and saved up about $8,000 from part-time jobs. For people in that situation, things can go wrong. If TQQQ starts melting, you may want to average down, but you don't have cash. You want to lower your cost basis, but you're short on capital. And most importantly, fear kicks in. You trusted me, put all $8,000 into TQQQ at a $54.8 average, and now you're stuck. It's not really going up. It slowly slips, maybe rebounds a little, then slips again. Like your float tube drifting in rough waves. Your account feels locked. Psychologically, it feels like your money is trapped. And then what happens? Other sectors start running. Rotation hits, biotech pops, random stuff flies. Then FOMO appears, you start touching things you shouldn't, and your investing discipline breaks. You even start feeling jealous of Bitcoin on the side. That's why I keep saying, if you want to do TQQQ, you need at least some reliable cash flow. So naturally, I end up liking covered call ETFs as companions. Things like JPEQ or QQQI. Add something like that. Let at least a little cash come in and use that cash to keep buying TQQQ, even fractionally. That helps keep your mental game stable too. Or at least hold short-term treasuries like SGOV for dollar parking. In other words, you need to hold cash openly and intentionally. If I hypothetically invested 100 million kara water in TQQQ, I'd want another 100 million kara water in reserve cash. But if someone goes straight into TQQQ with no cash buffer and no covered call support, you're just raising the difficulty level for no reason. Why make investing harder than it already is? That's why I keep bringing up QLD. QLD is 2x leveraged QQQ, double. You know the feel, right? It's 2x. And that is lower leverage than TQQQ. So what's good about that? Less volatility drag. Less pain in sideways markets. Easier to keep your mental balance. More realistic for long-term holding. Even if you get stuck for a while, 2x still gives many people a level they can believe in and survive. So for ordinary people thinking, I want to change my life a bit, I'm willing to take risk, QLD is a reasonable zone to consider. And one more crucial point, time can be on your side. If you zoom out historically on the Nasdaq, the probability of going higher over time has been overwhelmingly strong. So QLD can eventually tilt in your favor. And interestingly, a lot of people watching my YouTube are in their 40s to 60s. But honestly, this particular video is for viewers in their 20s and 30s. The concept of my channel is basically a face-to-face coffee chat about stocks, right? So if you're in your 20s and 30s, listen carefully. Lately, I keep hearing people buying TQQQ with no spare cash. That can get dangerous fast. In your early career years, you need room to build seed capital and emotional cushion. Without emotional cushion, investing gets very hard. Also, go look at the charts. .com, rate shock periods, all that. Big crashes brought huge opportunity windows. The people who got in there changed their lives. Sure, maybe they couldn't go in huge size, but still. If you hold enough cash, opportunity arrives. I'm not saying just do buy the dip blindly. I'm saying at least hold dollar exposure through something like SGOV short-term treasuries. You have to hedge inflation, right? Then buy QLD gradually through DCA. Why are you trying to buy so much right from the start? You can't think only about making money. Hold QLD, hold cash, and wait. QLD should be accumulated in split purchases, period. And if you're not confident, what did I tell you? Do fractional split buying. That's exactly why I even opened a new brokerage account and buy QLD at $20 per business day, then DGR at $20 per day too, right? Now you get it, right? QLD alone can be enough. Now, some of you might say, leverage products are just not for me. I read posts, watched videos, experts said don't buy leveraged ETFs. Then totally fine, start with SGOV short-term treasuries. There are good products like QQQM or SGHG too, same brand family as SCHD. Or VGT, also fine, includes tech exposure. Hold those, and if the market drops hard, then you can enter QLD later. You're not late. And if you're still early in your career, use a Roth IRA account. Roth IRA gives meaningful benefits. Since you can contribute up to $7,000, there's really no good reason to ignore it. People like me, full-time investors moving lots of cash in and out, may use direct taxable accounts more. But if you're just starting out, buying QQQM in a Roth IRA is perfectly fine. All right, let me wrap it clearly. TQQQ is a product for people with cash flow. Ironically, it's not that people who want to become rich should automatically buy TQQQ. It's that people who are already fairly well capitalized can use TQQQ as a good tool. That's a strong opinion, and yes, very blunt. But I believe QLD gives opportunity to a wider range of people. I think long-term investing is very possible with it. And for mental support, well, just subscribe to my channel, right? And if you're not confident, just buy SGOV first. And don't ask me which specific short-term treasury ticker is best. Any of them is fine. Just keep dollar assets and enter when real drawdowns come. And if even that feels annoying, just put your money into a Roth IRA, no problem. Build a structure that fits your situation. Got it? Like I always say, don't over-worry about outside noise. If your question is TQQQ or QLD, for most people, QLD is the better answer. I'm cheering for all of you, seriously. I film these videos as if I'm talking to my juniors, my younger siblings, my team members. So yes, the energy went up a bit, but I hope you understand where my heart is coming from.